generous with their knowledge and their wisdom.
Good morning. We are in the middle of a huge earnings week where we've seen companies like Google, Alphabet announce, and we're headed toward Amazon. We're heading towards Microsoft, Meta. And this morning we had some big names announce their earnings, and I wanted to go over those big names, let you know what they announce, and see if it's something that's going to change the investing appetite for that stock. In the early hours, we've already seen Eli Lilly report their earnings, and we'll take a look at those earnings. AbbVie is another pharmaceutical company. We'll take a look at those earnings. A very legendary industrial stock is Caterpillar. We'll take a look at Caterpillar and see what their earnings is about, see how they're projecting their revenues for the new year. ADP processes payroll, and it provides HR services for businesses. We'll take a look at what they had to announce. And that kind of does give us a little glimpse at where the economy's at. If there's more people employed, ADP is providing far more services. So I think that'll be a good company to take a look at and see how they announced. And then we'll take a look at a bank, UBS, which is a bank, I believe, out of Switzerland. And last but not least, we're going to look at a company by the name of Trane Technologies. It's a company I've never heard of, but they announced today. They have a fairly large market cap at around 70 billion. I thought it'd be interesting to take a look at that company, see what they're all about. So let's get started. And as we get started, I just wanted to see if you would consider being a paid member of our channel. We come together as investors, just share information, knowledge, and then we have some workshops on weekends that you could participate in if you become an advanced member. Take a look at the details in the description of the live stream. Take a look at which program might work for you, and I would really appreciate you considering it. Thanks. So the market is not quite open yet. It is about 6:17 Pacific, which would be 9:17 Eastern. So we're about 15 minutes before the market opens. You know, Bitcoin, it trades 24/7, 365 days out of the year. It has been really rallying quite nicely. It's up to $71,853 per coin. Very good. Very good. Go Bitcoin. I own Bitcoin, Ethereum, and Coinbase, and I'm glad. It's a small asset class in my portfolio, but I'm glad that I own it. It's somewhat of a hedge on the stock market. And with the election coming, I looked historically, the last time we had an election, 2020, Bitcoin really, really rallied. It rallied 300% in 5 months. I don't know if it's going to do that this go around, but last time it took off. So we'll see what happens this go around. And we have other notable stocks. Ether is up, which is nice. I also own Ether, and that's interesting to see. Looking at Asia, it looks like Shanghai, which is all the Chinese stocks, it's selling off again. It sold off yesterday. Actually, yeah, it sold off today, and it sold off yesterday. So that does not bode well for Chinese stocks. Japanese stocks have been rallying. Holy smokes. I don't have a lot of exposure to Japan. I've been telling myself that I'd like to get more exposure to Japan as well as India. And I'm going to need to put a little time in learning those markets so I can take advantage of those markets and diversify my portfolio. Looks like we've got Tomas. Thanks for joining. You want to look at Opera. Okay, we can look at it. I've never heard of it, so we'll take a look at it and discover it together on that. Thanks for joining this morning, Tomas. Hopefully your day is going well, and good luck with your stocks today. All right, so looking at the earnings calendar, and then Steve 90, you want to look at Everest Group. All right, Try to squeeze that in. Thanks for joining. So looking at earnings for October 30th, 300 earnings. Of course, a lot of these are small companies, but we're going to have Microsoft and Meta up after the market closes. So I'm going to try to stream this evening. Those are huge companies. I have the most capital invested right now with Meta, and most definitely want to see what they have to say. I also want to see what Microsoft has to say because that really affects many other stocks. But this morning we've had Eli Lilly, which has had a terrific run. They have the weight loss drugs. Let's see what they had to announce. AbbVie, Caterpillar, ADP, UBS, and then Train Technologies. We're going to take a look at that as well. All right. So it looks like Opera is a web-based like Google Chrome. Interesting. Man, I'm looking forward to seeing that one because I've never heard of that company. And it's great that you brought it up. Thanks for doing so. All right. Eli Lilly is not having a good morning. It's like when you wake up in the morning and you feel sick, you feel like, oh no, I think I caught a cold or a flu. My head hurts, I'm congested. I have a feeling that Eli Lilly's having that kind of morning. Just not good at all. And they're down 10%. What's the story here? This has been a stock that has just been working. Look at this, 700% over the last 5 years. Over the past year, 61%. Eli Lilly has been the best stock in pharmaceutical, biotech, life sciences. They have been the queen of the prom. It's just been an awesome stock. And they were going towards becoming a $1 trillion stock. So that $813 billion in market cap, it really shows that they have been very successful for quite a while. Their PE is really, really out there. 97. Holy smokes. You can buy Google Alphabet in the 20s. You can buy Meta in the 20s, Microsoft in the 20s. So Eli Lilly, you better be growing really fast to support that type of PE or your stock's going to come down. And maybe that's part of the problem today. We'll take a look. All right. So some of the news stories, let's take a look at this one. Market Watch says Eli Lilly stock tumbles as Mounjaro Zepbound sales miss wide margins. Okay. So pharmaceutical companies only as good as the pharmaceuticals they sell. And it looks like some of their key drugs are not working. So the headlines are pretty bad that they missed on revenue. That's not good. And they have a lot of demand for weight loss, which has been really working, but their other drugs are beginning to falter. So let's take a look at, and this might give me the information I'm looking for. Yeah, it does. So trying to make this big enough for you guys to see, but I could also read it. So revenue in Q3 2023 increased by 20%, driven by volume from Mounjaro. Okay. And Q3 earnings per share increased. Okay. 2024 revenue guidance updated to 45.4 to 46 billion for the year. So let me note that. And we'll compare it to their historical numbers. So it's 45.4 billion. All right, so that looks good. So it says they're headquartered in Indianapolis. I wasn't aware of that. I thought they were out of the UK. Huh. Well, you learn something new every day. And all right, so looking at their financials, this is tiny. I apologize, but I'll read it out to you. So revenue for third quarter was 11.4 billion. And last year was 9.4 billion. They were nice and profitable. Net income was good. Earnings per share was good. So what's with the 10% drop? Maybe the stock had been run up so high, investors were expecting better. And here's where they have their biggest drugs and Mounjaro is their biggest drug. Okay. And Trulicity did have a drop, but I'm not understanding why Mounjaro did have a big increase, and why is the market really upset with the growth there? Not sure. Okay. All right, so they gave us their guidance. That looks good. And I think that's all the information. Nope, got a little more. Okay, so revenue is there, profitable. So the company is profitable year to date and for the quarter. So it's a solid company, but it should be. If it's valued at 890 billion, it should be very good. It should be very, very good. So let's take a look at their historical information and see what's going on. So now, interesting. Okay, it's just a reporting glitch on the website. I thought it just went from negative 10% to positive 1%. Holy smokes. That was a nice rebound. All right, so it's reporting the quarter already. Good job, Stock Analysis. They already gave us the data, and they just reported, I'm going to say less than an hour ago. Revenue growth of 20%. Now, it is a drop from the previous quarter, which grew at 35.98. And maybe the market was thinking, hey, you should have done better. What's interesting is they had some negative quarters in 2023, 2022. I didn't know that. I thought they'd be kind of a perfect organization with that kind of market cap. So gross profit see the gross profit here. Their revenue is 11.4. Gross profit 9.2. If you divide 11.4 into 9.2, you're going to get to about 80% gross margin. That's why pharmaceutical companies are valuable. You see that huge gross margin. And as we look at, especially like ADP, you're going to see a far smaller gross profit, gross margin. And I wanted to point that out, that these really valuable companies, that is a consistent characteristic, is really good gross profit. Now, when we look at free cash flows, I'm going to change it to annual and see what this cash flow looks like for Eli Lilly. I'm probably going to have to look at the historical numbers, which is fine. We just want to kind of get our heads around it. Now, what's interesting is they haven't been incredible when it comes to cash flow. They've been good. 4 billion, 3.8 billion, 5 billion, 6 billion, 5.7 billion. And then they had a letdown here. Not quite sure why. Looks like they took some losses here. Okay. So somehow their operating cash flow was quite lower in 2023. And therefore, the free cash flow was pretty low in 23, which is interesting. So I'm going to use kind of like their high point, just giving them benefit of the doubt, because they have been doing a lot of good things, and that's 6 billion. So if I take their market cap, and that's 6 billion free cash flow, and if we look at their market cap, it's an $813 billion market cap. So if I divide that by 6, I'm going to get to 135 or so. That's really expensive, super expensive. When you look at other companies, especially pharmaceutical companies, you can do far better. So I've never been an Eli Lilly stockholder. Looking at their stock chart, maybe I should have been, but that's one of the things that kept me away from the stock, is that their free cash flow isn't very good. Now, their stock price is tumbling today. It's just one day. Analysts think the company is really good. It's the 20 analysts cover the stock, so there's plenty of coverage on the stock. Some analysts do think that it's way overpriced. $610 is the price target for one analyst. And at the same time, another analyst says, hey, this stock is really going to continue to work. and they're using mainly earnings per share. Earnings per share are going to flourish. In 25, it's going to go up an astounding 40%, and then 26, another 31%. Holy smokes. So that looks really good. But I only use earnings per share as 1/3 of the valuation in my assessment because I think free cash flows is truly the measure of a company's value. And therefore, I stay away from Eli Lilly. I think there's other options, and we're going to go over AbbVie next. I have been a stockholder of AbbVie. I like AbbVie, and I'll show you why when I look at it. So we'll see how things play out for Eli Lilly. Again, it's been a winning stock. Don't want to take away anything from their performance over the last 5 years. Good job, Eli Lilly, and hopefully the stock doesn't do too bad. And it opened up in the positive. Interesting. We'll take a look at it in a bit. All right, AbbVie opened up. AbbVie is a different pharmaceutical company, and it's a good pharmaceutical company. They have good pharmaceuticals, although their drugs have been around for a while, and some of them are losing their patent protection, meaning that competitors can begin to copy those drugs, the formulas, the recipes behind those drugs in the form of generics, and the price really drops down. So that 80% margin we saw on Eli Lilly, it kind of goes away when it goes to generic. You get a much lower gross profit. So those are just a couple of their drugs. They also have some new drugs that are coming online, but I think their portfolio of drugs has kind of been in flux. Their new drugs have not quite replaced the entire revenue that was lost from older drugs. So that's one of the situations that AbbVie finds themselves in. I was a happy stockholder for years of AbbVie, and currently I'm not a stockholder of AbbVie. They are a large cap, $334 billion. The revenue is $55 billion. Eli Lilly, their revenue is lower, but the perceived growth rate is much higher with Eli Lilly, which is why it's valued at more than double the market cap. But this AbbVie has been around probably just as long and is bigger. If we look at the PE, it is quite high in the current year, but look at next year, it's going to really drop. Hey, that's interesting. Going from 63 PE to 16. That might be an opportunity. The dividend is also nice at 3.27. I always like that about AbbVie. They always paid a nice dividend. It's to me, a dividend is not quite a reason or a method for me to value a stock, but it just shows confidence behind, their operations. When management says, "Hey, we can pay a high dividend, we can continue to grow, we can do all these things that are good for the investor." So I'm good with that. So let's take a look at the earnings announcements. So they had a dividend hike. That sounds good. Strong sales of Skyrizi and Rinvoq. Those are their new big flagship drugs. Very good. These guys are headquartered in the Midwest. Good operated company. Very good company. Now you can see that they kind of hit, some revenue loss in 2023. And it looks like we don't have the announcement on earnings yet in stock analysis. So let's take a look at the company's investor relations page, and we can go straight to the announcement and hear it from the horse's mouth. So we are good with the cookies on their website. So where are their announcements? Financial releases. And here it is. Okay, so AbbVie reports third quarter. Third quarter diluted earnings per share was 88 cents. It was a decrease of 12%. Okay. Revenues increased by 3.8%. That is good news. up to 14.46 billion. Okay. They raised their earnings per share guidance for the year. They're going to guide and make 10.67 to 10.94 per share. Very good. And they're going to raise their dividend by 5.8%. Again, that's one of the things I've liked about AbbVie is they are confident in being able to raise their dividend, and they're confident in the business, and they are willing to raise it. So that is pretty neat about AbbVie. Let's keep looking. AbbVie usually is pretty good about giving investors a lot of information. I feel that the relationship between the management of a company and the stockholder, it's my individual opinion, but I think the more information they provide, it really shows that they truly are partnered with the investor. And I like that. The less information that they provide, it means that they're just not really appreciating that stock investors really want to know more about the company. And AbbVie has always been a good information provider. I like that about them. So we already talked about their outlook. We're good with their outlook. Oh man, they made it really small. Sorry, everyone. But I'll read it out to you guys. Revenues have been increasing. That is good. It increased 3.8% in the current quarter. And these are their different companies, drugs. Humira was their big drug, and you can see that it's dropping. That's the one that's going away. And the drugs that are replacing it are Skyrizi and Rinvoq. You can see that they are growing nicely. So they are kind of replacing that legacy drug with a new drug that's selling. They also have Botox, by the way, and Botox happens to be a cosmetic, compound, and I don't want to call it a drug. It's more of an item, and people use it for cosmetically, and it's a cash item. It doesn't have to go through insurance. So that's a very good cash generating business for them. That was an acquisition some time ago, and it's been a good one. For the first 9 months, they grew at 3%. Those growth rates are very good for a company like AbbVie because they're so darn big, right? We saw that Eli Lilly grew at 20%, but that's a market cap that's more than double AbbVie. AbbVie continues to grow and really bring new drugs to the market and really deliver good profits. So this would be a lower risk, good performing stock potentially if you're looking for a good pharmaceutical stock that is a good dividend payer. All right, so a lot of different schedules looking at how they treat their accounting. Looks like the accountants are really going crazy with schedules on their earnings. Again, it's good they provide this because maybe it's not information that I care about, but maybe another investor really cares about it. So AbbVie had a positive earnings. The stock is up just a little bit. What's the market doing? What is the context of the market? And the market is selling off a little bit. Not too bad, not too bad. Looks like the S&P is, let's call it flat. This is really not a sell-off. The Russell is selling off a little bit. But Eli Lilly is, wow, it's really selling off 13%. And then AbbVie is holding its stock price and 0.62%. The market isn't in love with their earnings, but it's a positive earnings when you see a company is stable and consistent and really favorable to investors. I like their earnings. I thought it was good. It's not a kind of superstar, earnings report, but it was good. So looking at their earnings, they have been seeing negative revenue growth, meaning their revenue loss, but we saw that they are now growing, which is very, very good news. Very good news. When we look at their cash flow, let's take a look at their cash flow. We're going to look at their debt. One of the things that I've monitored with AbbVie and has been a concern is their debt, but let's look at cash flow first. See, this is where the money's at right here. Look at those beautiful numbers. 24.2 billion in free cash flow. Holy smokies. No wonder why they can pay really high dividends is they're just cranking out cash. And again, these guys are bigger than Eli Lilly. Eli Lilly was not creating a whole lot of cash. And it's that top line growth that is really exciting the market. But look at this cash. It's a fourth, maybe even, coming up to a fifth of what AbbVie's been doing. And the trailing 12 months is at 17. So I'm going to use 20 as just kind of a factor, just to kind of do high level assessment. And you're paying about, let's call it about 17 times free cash flow for the company if you look at their market cap. So that isn't too bad. That isn't too bad for a quality pharmaceutical company that's going to be paying a dividend. I'm not quite sure if I have a full evaluation of AbbVie. I know I've had it in the past, so it looks like I do have it. So let's take a look. So I think the company is fairly priced. It's actually priced at a 1% premium. So right now I'm not in the stock. I'd like to see a better discount on a stock. I'm trying to find companies that are temporarily misunderstood. They are in this buy zone. They're in this buy zone where it's really a good company. For some reason, the market's selling it off. It's misunderstanding the stock. And I buy it in this zone, then watch the stock recover and I make money. And sometimes like an AbbVie, they pay a dividend too. So I win two ways. I see an appreciating stock and I make money. So I don't think we're quite there with AbbVie. Right now it's even Steven on the day. And hopefully it continues to do well. If it does drop enough, I might be a buyer, but it's going to have to drop maybe 20% in its value in order for me to be really interested. But I'll be tracking it. I'll be waiting for it to be in the right stock price in order for me to be an investor. Let's move on to Caterpillar. And before I do so, Geithner 10, thanks for joining. It looks like there's news around SMCI. Let me take a peek at that, see what's going on. That is a high-flying AI stock. I have no idea what I'm going to find here. Whoa, holy smokes. Down 33%. Oh, no. This is the story. Free fall after accountant resigns. So all these publicly traded companies, they have a relationship with a public accounting firm. In this case here, it's Ernst & Young. And at the end of each year, a company will turn their financials over to this public accounting firm who will then audit those financials. And they do a variety of tests to make sure that everything is accurate. Like, hey, you said your revenue is this. We're going to test and kind of follow some transactions through the entire process to make sure that we feel confident that that number is accurate. And they look at different tests of the financial statements. They test the income statement, balance sheet primarily, because the statement of cash flows is an end product of those, really, of the income statement, as well as some other things on the balance sheet. So when your public accountant resigns, they didn't resign because everything was good. That's bad news, man. That is bad news. I hate dogpiling on a company. That's just really bad. And if they knew that the accountant was not feeling comfortable, the company needed to make them comfortable. Like, oh, what's the problem? Well, we don't believe this, that, and the other. Okay, well, let's clarify it. Let's figure this out together and let's make you comfortable. If they probably tried to do that and they weren't able to, and Ernst was like, no, we need to leave. I'll come back to a famous case And Enron, this is going back a ways. And the reason why public accountants need to do this is Enron had an accounting firm by the name of Arthur Anderson when they were manipulating their financials and overstating their revenue, overstating their financials, basically. And Arthur Anderson was aware of it and didn't disclose it. So when it was found out that there was fraud at Enron, the officers of Enron were in a lot of trouble. They went to prison. And public accounting firms, that's the death sentence. After it was found out that there was fraud and that Arthur Anderson was involved in the fraud, Arthur Anderson was not allowed to be a public accountant any longer. Period. End of story. That was the end of the firm. Period. One time. You get one shot. So that's why these guys are probably saying, this is too hot to handle. We're out of here. Good luck, but we need to leave. So big news. Thanks for bringing it up. Humongous news. And this was a story that was kind of a whisper story. And it's really becoming reality. That's huge. So we'll see how things sort themselves out. I'd like to be sensitive to the employees of Supermicro Computer. There's employees that depend on that employer for their jobs. I hope I hope Supermicro is okay, but I hope they can find jobs and can support their families. All right, moving on. Caterpillar. We're going from technology to old school industrial, big machinery. Most people know what Caterpillar is all about. Think of all those big tractors, and they have earth movers. They have all kinds of big machinery. They also do farming machinery. They have a big market cap of 187 billion, revenue 65 billion. PE is quite good, 17.9, 18 compared to some of these technology stocks, and they pay a dividend of 1.46%. Analysts think they're a little expensive. Looking at the last 5 years, the stock has been getting it done. 165% rise, which is very good. And last year, 55%. Very good. Now, this is a stock that I have to say has surprised me how well it's done, because the economy hasn't been on fire in 2024. It hasn't been like, oh man, we have boom. China has been kind of crawling along, and now they expect they're going to grow in 2025. And Caterpillar will flourish when you have a lot of construction, when you have a lot of economic activity. In the case of, the economies like the US, again, we're not setting any records on GDP growth, economic growth. Having said that, I've been surprised that, Caterpillar was doing as well as it was. I'm like, where's all this business coming from? So I'd like to take a closer look. Looking at the headlines, and Mike, thanks for joining. We can definitely look at CHCT. Never heard of it. Let's take a look. All right. So Caterpillar stock drops as weak equipment sales lead to rare profit miss. That makes more sense to me because, again, the economy isn't booming. It's not like construction's doing great. If you look at commercial real estate, it's really in the doghouse, and even home builders are beginning to slow down quite dramatically. And when you look at that type of economy, I just have to think there's going to be a slowdown for Caterpillar. So I don't understand why their stock price is so highly regarded. It's a great company. No argument out of me on that. But it's just when you look at their revenue growth, they're beginning to slow down. So when you have a slowdown, it could be quite slow, right? Like now I'll give them a pass on COVID, right? We had a big pandemic. Things really came to a halt and the revenues really did drop, but I'm not going to hold it against them. But before that, they were slowing down there. They've had a boom in 21, a boom in 22. And this equipment, right, they really had lots of sales for 3 consecutive years. It's not like this equipment, wears out in a year or two. This equipment wears out over 10 years, maybe longer. So once you sell it, that company that bought it can use it for a long time. So I don't think they're gonna be growing fast anytime soon. I would say that they're probably gonna be growing slow for a while. And you look at their last 3 quarters, it's red on the screen. So this one is interesting that the stock is priced so high, yet the company's not growing. They're actually contracting. So let's take a look at their free cash flow and see what that's all about. So free cash flow has been improving. They went from 3.6, 4.7, now 9.6. Beautiful. Very good job, Caterpillar. And we look at the overall market cap, I'd probably multiply that number times about 15. That gets me to about $140 billion. So this is priced at a premium, in my opinion. It's a good quality company. Everybody knows what Caterpillar is about. And that's one thing with stocks that look like this. When the investor, the retail investor, and even big investors, right, they're very comfortable with Caterpillar. This has been a staple to the economy. They are a desirable company because there's only a couple companies that create this big machinery. In the United States, it's Caterpillar and John Deere, or just now called Deere. And there's also international players like out of Japan, you have some equipment manufacturers, and I'm sure there's some in Europe as well. So, but in the US, Caterpillar is probably the top dog. Having said that, it's just priced quite expensively, in my opinion. It's been going up and up and up, and but their financials, I could see their growth rate over the last couple of years really did look great, but the growth has stopped. So now that the growth has stopped, what are you guys going to do? And it's not like the market's going to turn around quickly. This is heavy machinery. It's really expensive. It lasts a long time. So I'm going to stay away from CAT. And it's interesting that the stock is selling off. We'll see how things settle down. All right. So I think it's time to take a look at some of the paid members wanted to see a couple stocks. So let's take a look at, I think it was Oprah, and then we're going to look at CHCT. So Oprah, according to Tomas, it is a company that is a technology company that provides a browser similar to Chrome. Opera Limited, together with its subsidiaries, provides mobile and PC web browsers and related products and services in Norway and internationally. The company offers mobile browser products such as Opera Mini, Opera Browser for Android, iOS, Opera GX for PCs. Okay. Okay. So one of the questions I would have is, and maybe Tomas, is what makes them different than Chrome? What makes them better than Chrome? What makes them? Are they trying to catch a part of the market that they think, hey, this part of the market has a unique set of requirements, and we're going to solve those requirements quite well? So that'd be an important question. I like that they're kind of going after a space that's humongous, and we'll take a look at their financials. And Bobby, good to see you this morning. Thanks for tuning in. So you're interested in Salesforce and Canadian Pacific. I've been wanting to look at Canadian Pacific. I looked at Union Pacific, but let's look at CRM, and then we want to look at CP, right? Okay. And I have to move a little bit fast because I've got like 6 minutes to go before I have to jump on a different call. So let's take a look at Opera, and the financials for Opera look really good. Look at this growth. It's a small company, but this is good growth. Now, when was their earning? Where were they now? So they announced yesterday. So we have fresh data. Looks good. Revenue continues to grow nicely. Very good. Are they already profitable? See, this gross profit looks good. 450, 254. So they're operating with like 55% gross profit. Pretty good. So they've been profitable. That looks good. Okay. So they're profitable. So one green flag is they're profitable. Another green flag is they're growing their revenue nicely. It'd be nice to see them grow faster because they are small companies compared to uh, Chrome. They're quite small. So I think Tomas is saying that so less RAM, so it operates more efficiently on your device. Okay, if that's the case, maybe they're at a huge advantage. And I don't think Google would be able to acquire them because, especially in the US, the regulators would freak out. No, we already said you're a monopoly. Don't be acquiring small players, but maybe a Microsoft would acquire them or some other software company like an Adobe. All right. So looking at their cash flows, they're producing cash 84 million, excuse me. And 84 million. So this is a high growth company. I could see myself paying 30 times free cash flow because they're going to grow that cash flow. That gets me to like 2.4 billion. So let's look at the balance sheet, make sure the balance sheet isn't, holding a bunch of debt. And we look at cash is 106. Yeah, they have more cash than they do debt. This looks good. This is a nice little company. The fundamentals say it's a strong buy and it's discounted. But what I would encourage you to look at is, do you believe in the story that they're telling, which is, are they going to be 10 times bigger in 10 years? Are they going to be much larger in 5 years? Is their success really really going viral? Like, oh, people love this operating system. Is it going after some industries maybe that need this type of solution? So that would be the homework. But fundamentally, this is a good looking stock. It's small. It's in a space that I like, good profit margins. It's growing nicely. And I'm going to keep an eye on it. And it's a small cap. So it could really move up quickly and it could be acquired. A bigger company can come up and say, hey, we're going to give you a 60% premium. And stockholders are like, sweet, I made 60% overnight. All right, so let's handle a couple more that came up. So CHCT, Community Health Trust. Community Health Trust Incorporated. Integrated Health Real Estate Company, owns real estate that is leased to hospitals, doctors. Okay. So stable industry. Hopefully they're not like MPW that's riddled with problems. They're down 35%. Man, maybe hospitals are having a tough time paying their bills. Down 61%. Holy smokes. Big dividend. And Mike, with these guys, do these guys have any problems with collecting the rents on leased properties? So the revenue's growing. Revenue's growing. Asset write-downs, because that's non-cash. It's bad, but it's not, to me, it's not super bad. It's just unfortunate that they have that type of effect. Okay. So funds from operations is $2.49. And their dividend rate is $1.86. So they can afford their dividend. They can afford that 10%. What I would say is that you got to study their tenants and make sure that they're paying their rents, because that's what MPW has just struggled with. Their biggest tenant ended up going bankrupt, and it's really just ruined MPW, or at least taken away 80-90% of its value. And maybe investors are really scared because MPW has been going down so bad that they are also nervous about this particular stock. But when other investors are nervous, it could potentially be a great opportunity to buy something that's really discounted. So This is a good one to take a look at. And if you're super comfortable with their tenants that they can pay their rents, this is a winner. If you find that there is enough there that would make you concerned that, hey, a couple of their tenants could stop paying their rent, then you got problems. So this looks good, but that's the big red flag or yellow flag is you got to check out their tenants. Make sure that they can pay their rents. If that's the case, this looks good. So good luck with it. All right, we're going to look at CRM. And CRM is salesforce.com. It's down a little bit over the past year. It's up 51%, doing really nice. And it really provided an opportunity to buy the stock at a discount in the May, June timeframe. And this company's really solid. They haven't announced yet. They're going to announce on November 27th. Last time they announced, pretty favorable, financials that they are growing. They're growing really nice. This is a enterprise software company. And I think they have a good growth trajectory. Some of the investors don't like them because they think AI is going to replace a lot of their software, but I don't think AI is going to replace software all that fast. I think it's going to take a while. And CRM may actually be a beneficiary of AI. They do have very good AI products. They produce good free cash flow. I've been tracking Salesforce for a long time. And they provide tremendous cash flow. $11.4 billion of free cash flow. So this type of company, I could easily multiply it times 20, 25, because they are a good growing company. And it gets me to maybe $225, $250 billion of value. It is a little overpriced right now, but it's a good investment. If you believe in Salesforce and believe in their future, you can see that their chart shows that the stock has been run up a bit. And if you wait for some of these drops when it sells off, you can pick up the stock at a really nice discount. I mean, just as recent as October of 2023, it was down around $200 per share, which is 33% lower. If this stock were to pull back, I mean, it'd be a really interesting stock to look at. And right now it's near its all-time high. So overall, quality company, but it's near its all-time high. It really does value near its valuation, but it is a little overpriced if I were to look at the fundamentals. And I'm going to end our stream with Canadian Pacific. Canadian Pacific is up a bit. They announced on the 23rd. I've been meaning to evaluate this stock and compare it against Union Pacific. The railroads have these natural barriers of entry, which is we already have the set of railroad companies we need. It's not like you can start a railroad company, start competing with these guys. You just can't. Market cap 71 billion. I think it's smaller than Union Pacific. Provide a small dividend. PE ratio 27. Looking at their growth, wow, this revenue growth looks awesome. Was there an acquisition that happened? It looks like they acquired somebody, and then 2023 was really affected by an acquisition. And this is in Canadian dollars, which should be around the same US dollar amount, just a little different. Whenever I look at railroads, they're always a little bit priced at a premium. In this case here, we're at $5 billion of free cash flow Canadian, and their market cap is being reported in US dollars. So this one, again, I mean, railroads, this one's priced at like 16 to 18 times free cash flow. And I would say I'd probably be more comfortable paying like 12 to 14 because these are slow growing industries that are, they're profitable, but you look at their gross profit, right? You look at revenue is 14, gross profit is 7.7, 50% gross profit. That is good. That is very good, especially when it's stable and it's growing. In this case here, they acquired a business. Looking at their balance sheet, how much cash and debt? So debt 16. That's not too bad. 16. Then their EBITDA is 5.6. So they're right there at the 3. They're about 3 times debt to EBITDA. And that's at my limit, so to speak, for them to qualify to have a good balance sheet. I think they have a good balance sheet because they have a stable industry, and they're right there at the 3. They should pay off some of their debt. It looks like they probably acquired some other company, and they have brought them into their operation, which is why you saw a big bump of 40% in revenue in 2023. So it's a quality stock. It's just a little bit of a boring stock, and probably good for an older investor that wants to get into a stock that's going to perform well. It's not going to set any records like an AMD or an Nvidia, or, like a Meta, just, going up really fast, but it could also go down really fast. These types of stocks don't go down all that often. They just continue to go up. This stock hasn't really done a lot over the last 4 years, but overall for the 5 years, it looks good. And same thing with Union Pacific. For the past couple of years, it hasn't done all that great, but the years where you had those supply chain issues, it did really, really well. And it looks like these guys did as well. So Canadian Pacific looks interesting. I would compare it to Union Pacific and see which one is the better of the two. And again, for the right type of investor, it's a good investment. It's a nice, steady, a little bit of boring stock. And some investors want that. They want boring. They don't want exciting and risky. So Mike did some homework on the REIT that he looked at. Yeah, I agree that there is good high upside potential there. Yeah, I agree. If you clear that, hey, their tenants are fine, I think you got a winner. So, um, good luck with that. Good luck with that. I'm going to take a closer look as well. So, hey, everybody, good luck out there today. Looks like the market is trading in the green. Very good to see. I hope your investments go up in value today. It was good to cover the biggest names that announced today, as well as some names that the members wanted to see. And thanks a lot for tuning in. I'm going to try to stream this evening, kind of go over the big names tonight, as well as any others that you guys want to see. If you want to join me, that'd be great. But for now, everybody have a terrific day. And thanks again for tuning in.